What if I told you that every major move in the crypto market since 2014 could be anticipated by just one key factor: liquidity? Well, it's common knowledge that money moves markets. Most investors don't realize just how powerful liquidity can be in predicting what comes next. This single indicator helped investors ride a 20,000% surge from 2015 to 2017 and a 2,000% rally from 2019 to 2021. It also signaled the brutal 80% crash in 2018 and the 70% drawdown in 2022, all without hindsight or cherry picking. This isn't some secret formula. It's a well-known force that everyone watches, but very few understand how to use effectively. And in this video, I'm going to show you how liquidity is already mapping out the current crypto cycle, not just for the coming months, but through 2028. Here's the big picture. When liquidity expands, investors take more risks and crypto rallies. When it contracts, the risk-on party ends. As Warren Buffett famously said, "Only when the tide goes out do you discover who's been swimming naked." So the real question is, how can we know when the tide is coming in or going out? That's where this global money supply chart comes in. It tracks the combined liquidity from 20 of the world's largest central banks, including the US, China, and Europe. This is critical because Bitcoin is a global asset. US data alone isn't enough. Anyone around the world can be a buyer of Bitcoin. Looking at the chart, global money supply has trended higher since 2014, just like Bitcoin. But within that uptrend, there have been three major periods of contraction: 2014, 2018, and 2022. And guess what? Those were exactly the times crypto saw major declines. To dig deeper, we don't just look at the total liquidity, we also track its year-over-year growth rate. When this line rises, liquidity is expanding. When it falls, or worse, turns negative, liquidity is tightening. Now, let's add some context. Green boxes indicate rising liquidity. Red boxes mark falling liquidity. Overlaying this with the entire crypto market cap reveals a clear trend. Green boxes align with bull markets, red boxes with corrections or sideways action. This isn't just visual either. The data proves it. Research shows that Bitcoin has an 8.95x sensitivity to a 10% rise in global liquidity. That means when global liquidity increases 10%, Bitcoin typically jumps 90%. So what's happening now? Recently, global liquidity has been climbing, yet crypto prices have dropped about 15%. Does this break the correlation? Not exactly. Two important factors are at play: uncertainty around tariffs. This chart tracks economic policy uncertainty, essentially how confused markets are about future government and central bank actions. Right now, that uncertainty is at its highest since 1995, largely due to Trump's erratic stance on tariffs. Markets hate uncertainty, and crypto, being a risk asset, tends to suffer during these periods. But these spikes in uncertainty rarely last. With Trump's official tariff announcement on April 2nd, the market may now gain the clarity it needs. If uncertainty drops, it could trigger a major rally in risk assets like crypto. Lag time between liquidity changes and crypto price reactions. Liquidity doesn't impact crypto instantly. It takes time for capital to move through the system and reach risk assets. Historically, the best alignment happens with a 3-month lag. When we shift the liquidity line 3 months forward on a chart with Bitcoin prices, the correlation tightens significantly. If this pattern holds, a crypto bottom in early April could be followed by a strong multi-week rally. But this only tells us what's likely in the short term. How long can the rising tide last? To answer that, we use a long-term chart tracking liquidity cycles in developed markets going back to the 1970s. This puts global liquidity on a scale from 0 to 100, where higher readings signal loose conditions and lower ones tight. Like crypto, this chart moves in cycles. A full cycle, from one bottom to the next, averages about 5.5 years. Liquidity typically rises for 33 months, then declines for the next 33. The last major bottom in global liquidity came around December 2022. If the cycle repeats, liquidity could rise until September 2025, supporting risk assets like crypto for another 6 months before tightening again into mid-2028. What does this mean for the current crypto cycle? We believe the current bull market will be more stable than people expect. Gone are the days of wild pump and dump cycles. Institutional money is now flowing in, and that's pushing Bitcoin higher in a more controlled fashion. So while Bitcoin may continue its aggressive trend through 2025, expect slower, steadier growth. That said, we do see the current dip as a buying opportunity, even if there's a bit more short-term pain, possibly down to the $70,000 support level due to tariff-related uncertainty. But once that clears, Bitcoin could quickly return to all-time highs. These breakouts tend to move fast, too fast for most traders to catch once they're obvious. That's all for now. Thanks for watching, and don't forget to subscribe to the channel to stay up to date with all the latest crypto news and more.